Now, one thing I can honestly say that I did not know coming up through my younger 20s, into my 30s, and almost into my 40s now is that I did not realize how much credit card debt, carrying credit card debt month to month, keeps you broke, keeps you poor, and costs you a lot of money. That is because of interest. So I decided to make this video basically to explain how credit cards keep you broke, how credit card interests work, the best practices to do when using a credit card, and really the benefits of having a credit card and whether you should even consider getting a credit card. So we're going to jump right into the meat and potatoes of this thing, and we're going to go right into why credit cards are so dangerous, and that is because of the interest rate that you are charged if you carry a balance. Let me repeat that. If you carry a balance, the way to avoid the interest rate at all costs is if you spend money on your credit card and you pay the amount that you spent by the due date and bring your balance down to zero. If you are able to do that, you don't even have to worry about the APR because you won't be charged because you're not carrying a balance. But again, if you are carrying a balance day to day, month to month, after your statement comes out, after your due date, you will start to accumulate interest and have to make interest payments. So now that that's out the way, again, we have our APR, which is the annual percentage rate. And I have a couple of my credit cards right here. And basically, two of my credit cards right there have a 24% interest rate. So let's take that as our example, right? We have a 24% APR, which is our annual percentage rate. And we know annual means yearly, right? So the way that we find out how much we're going to be charged per day, because interest is charged per day, not per year, right? You take that 24%, which we know is our example APR, and you times it times the annual time frame, which is 365 days. And basically, you're going to get a number of 0.0658% per day. And once you get that number, it sounds a little funny, like 0.0658. What is that? You take the balance that you're carrying, per day, and you times that percentage, that 0.0658%. Let's say you owe $1,000. If you times 1,000 times that 0.00658, basically your APR that you're gonna be getting charged on a daily basis is 66 cents per day. So if you have $1,000 credit card balance, you're going to be getting charged 66 cents per day if your APR on your credit card is 24%. Now, if you carry a $1,000 balance for, let's just give an example of a month. If you carry a $1,000 balance for 30 days in which you're paying 66 cents per day on that $1,000 for a 30-day time frame, you times 66 cents times 30 days, you get $20, right? So you are going to owe $20 in interest after a 30-day period, which doesn't sound like a lot, but if you think about it, if you had a $1,000 balance for a full year, a full 365 days, 12-month period, you are going to end up paying the credit card company $240 before you even, make a payment. Because as you make your payments, if you make the minimum payment, which we'll get into that trap in a second, if you make just the minimum payment, it's going to take you longer to pay your bill, obviously. But again, you're accumulating $240 of interest per year on just $1,000. Now think about it, if you had, $2,000. Now we're talking about $480, $3,000. Now we're talking about another $240, which is about, what is that, $620? It's getting up there. And say if you have a $10,000 balance, and again, these are pretty extreme numbers because it happens. You can have a $50,000 limit credit card and owe $10,000, and you can easily be in that trap of paying a high interest payment. So I know that was a pretty long portion of the video, but that is the biggest reason why carrying a credit card balance is basically detrimental to your financial situation. Because imagine if you have multiple credit cards in which you have these high APRs, you're carrying multiple high balances on high, credit card debt numbers, you're going to be paying interest. You're going to be giving away money, basically is what you're going to be doing. You're going to be giving away money. You're going to have to be paying so many minimum payments just to penetrate that interest, that if you allow yourself to get submerged in like all these high balances, it is a surefire way for, disaster in your financial life. And again, the only way to avoid paying interest on a credit card is to pay your balance in full each month and not carry a balance. Now, one thing I want to touch on very quickly is what I call the minimum payment trap. Now, basically, it is exactly what it sounds like. If you pay only the minimum payment on your credit card, it is going to take you so much longer to pay off that balance. And if you pay lump sums, if you overpay, or just pay it off, in full each month, I mean, obviously, right? But let's use our example of of that same 24% interest rate, and say if you are carrying a balance of $3,000, right? So we already did the math. Let's just skip straight to it. We did the math on $1,000 over a 30-day period. It's gonna cost you $20, right? So if we do $3,000, we already know that $20 is gonna be times 3 because of the difference between 1,000 and 3,000. Now we're talking about $60 a month, right? On a $3,000 balance. And on a $3,000 balance, you can probably expect to pay a minimum payment somewhere of like $75 to $100 on that balance as a minimum payment, right? So think about this. If you have a $3,000 balance already, you say, hey, I'm gonna just pay my minimum payment, I spent what I spent, I needed it, whatever I bought, whatever, or maybe I just had this balance for a long time. I owe $3,000, but I'm just paying them $75, I'm good, right? Your balance goes down from $3,000 to $2,925, right? Once they hit you for that interest of $60, your balance then goes right back up to $2,985. So congratulations, that $75 payment was actually a $15 payment. And let's say you're content with that, you're cool, right? You just paid $75 on a $3,000 balance just to still owe $2,985. You carry that $2,985 those next 30 days, and then you're going to get hit, based on the whole math of the 24% interest rate, you're going to get hit for another interest rate charge of, it's going to go down a little bit from $60. Now it's going to be $59.70. Why, 30 cents less than 60, right? You pay that $75 again, it's going to take you down to $2,910, right? Once they tack on that $59.70 charge, now we're talking about $269.70 is what you owe. So think about this: over a 60-day period, a 2-month period, you owe $3,000 originally, right after the first month. You paid 2 minimum payments, $75. You paid $150, basically on a $3,000 balance between 2 months, and you still owe $2,969.70. That, my friend, is the extreme long game, and it's gonna cost you a lot of money when you pay only the minimum payment. Paying the minimum payment on a credit card is like being in an ocean with 2 ropes tied around your ankles with 100-pound weights tied to the other end of each rope. It's like you're never going to get out of that ocean, bro. You got to cut the weight. You got to cut the rope and just make lump sum payments. Do what you got to do. Sometimes consolidation can make sense. Sometimes it doesn't make sense. But really just avoiding it altogether and only using credit cards if you need to, or if you're in that kind of like, we'll get to the benefits, but we'll get there. But basically, never ever submerge yourself in credit card debt, especially if you don't have to. Now, one might ask, after all of that, why would you even ever want to get a credit card? If credit card costs you so much interest, if it could be a debt trap, and basically you get caught in this minimum payment, rat wheel, why would I just won't get a credit card? Now, that could be an option. I mean, you don't necessarily 100% have to have a credit card, but the number one reason you're going to want a credit card is to build and strengthen your credit, because at the end of the day, if you have a $2,000 limit credit card, you swipe things here and there just to buy it, and pay it back, you're showing that you have access to capital in a sense that you could use, that you don't use the whole thing, but when you do use it, you pay it back on time in full every month. That's gonna make you look good for your credit. So I would never say don't get a credit card unless you're just so irresponsible and you feel like you'll fall into that trap. And that's okay, because I was that guy. You know what I'm saying? I was that guy where like I looked at having a credit card as just like, I have these options. I have the option that if I ever want to do this, if I really don't have the money, I really have the money if I want, and I'll figure it out on the back end. That's going to get you messed up. But again, if you feel like you're financially mature and you really want to have the benefit of strengthening your credit score and showing that borrower capability, that responsibility, that, you know, paying money back on time and things like that, there's nothing wrong with getting a credit card. The second positive about getting a credit card is going to be like things like fraud protection, because it's safer to use a credit card instead of using a debit card when you're buying certain things. Like say if you're buying things online and you may get in a situation where you have to do a dispute. I know credit cards will be faster to like give your money back, or, you know what I'm saying, work with you as far as customer service than regular banks. Credit unions are pretty good, even if it's debit or not. But I know from a fraud protection capability, it's pretty good to use a credit card, especially for larger purchases as well, other than debit, because it's not your money. You know, debit, once it's debited, it's like a liquid gone. You know what I'm saying? So fraud protection could be a reason why you would get use a credit card, get a credit card to use it. One of my favorite things, which is a number 3 benefit to having a credit card, are the rewards. And that will be in the form of like, you know, cash back, air mileage. I don't do that, but I'm definitely big cash back guy. Like I have cards where like I use for certain things. Like I like the American Express Cash Blue, gives you 6% back on groceries. I mean, you're gonna go grocery shopping anyway. You know what I'm saying? They have a lot of cards that do like the Apple Card, like 2% back on everything. It's not a thing where you go out and get a card to use it for cash back and then you accumulate a balance and then the cash back doesn't even matter because the interest is going to crush the cash back that you get. No, you get a credit card and use it for rewards on things you're going to buy anyway, like monthly bills, essentials, things that you're going to pay, groceries, gas, you know, not clothes and shoes and games and video games and things that restaurants, things that you know, kind of don't need. I'm talking about like when you get a credit card and you use the rewards to your benefit on things that you're going to buy anyway, it's like free money in a sense, as long as you keep that responsible, you know, mindset of I'm not going to let these companies charge me interest. They're not about to win off me. As soon as you slip and like, I'll let them hit me this time, and then you go under, it can get real murky down there. It can get real murky down there. I'm just being honest. So yeah, cashback rewards would be a you know, reason why you would use credit cards. And lastly, there are things like, you know, travel benefits. Sometimes, you know, again, not really so much so fraud, but like dealing with like accident insurance, rental car insurance, you know, any type of trip where something like goes wrong, cancellations, things like that. Any type of discrepancy you have, like if you're buying something or you're doing something where there is a potential for a discrepancy, just like the fraud protection, it's always better to use a credit card, because if you ever have to go that route of like, you know, disputing anything, it'll be safer than having your liquid cash taken and trying to get that back. Now, 3 reasons I would give to avoid credit card use completely. I probably, if I were you, would not get a credit card, is if you're the type of person to tend to overspend. Because again, just like I was, you know, open and said that for me, I looked at it like, you know, I got options. You know what I'm saying? If you tend to overspend, don't get a credit card. If you plan on getting a credit card, buying something, carrying a balance, and figuring it out later, don't get a credit card, because you're going to get not taxed, but you're going to get hit with those interest charges. And again, if you do that on a high balance on one card, or, you know, medium to even low to high balances on other multiple cards, you're going to be paying interest is going to become a monthly expense for you. And I don't want that for you. And lastly, if you know, like I said, if you struggle with impulsive spending, like you're just walking around and you see it and it's like, I got to get it, don't even bother with credit cards. There are other ways to show that you can, be responsible and build credit. Although, having credit card use in your tool belt as far as building credit, you want a well-rounded use of credit and, credit sources and, borrower history. But if you tend to overspend and you make impulsive decisions, or you feel like you're going to carry a balance, don't get a credit card. But pretty much that's where I'm going to leave this video. Now, I want you to check out this video right here, because there's a thing called a PayPal debit card. Now, if you don't really want to mess around with the credit card, but you still want to get cash back on things you're going to buy anyway with your own money, like groceries, even apparel, even restaurants, rideshare, check out this video I made on the PayPal debit card. I really think that you're going to enjoy that one. And like, comment, and subscribe on this video if you did enjoy, find value in it, and I will catch you guys in the next one. Peace out.